Okay, guys, if I were a young investor and I were building a growth stock portfolio, I'm gonna give you the 12 stocks that I would buy. Now, this video is actually gonna provide 25 stock picks. Why? Because every investor has a different risk tolerance. So I'm providing bonus picks for speculative investments, dividend stocks, and more. We're gonna build a diversified portfolio that focuses on those mega trends that we talk about on the channel, from artificial intelligence, big data, cloud, semiconductors, the new oil, digital advertising, fintech, and more. Global electric vehicle sales reached 10% in 2022. That's an increase from 8.3% in 2021. That number leaves a tremendous amount of growth. Which company could we buy that could benefit the most from that secular growth trend? Analysts at Statista expect the global EV industry to expand at a compound annual growth rate of 17% to $858 million by 2027. That's as government incentives and technological improvements drive growth. Electric vehicles made up 5.6% of the US car market in 2022, driven by Tesla. Tesla dominates the US car market with around 64% market share. Now, if you're familiar with Harvard Business School professor Michael Porter, he writes about two sources of competitive advantage. One, differentiation, offering a better product for which customers are willing to pay a premium price. And second is cost leadership, selling a good product at a price below that of its rivals. Tesla cuts out the middleman by eliminating dealerships, and it's more efficient and vertically integrated than its competition. Because of this, Tesla is more profitable than its rivals, with operating margins exceeding 17%, way more than GM at 8.1%, and Ford at only 1.5%, according to FactSet. Additionally, Tesla believes manufacturing improvements could lead to a stunning 50% reduction in its production costs for its next generation of vehicles. The scariest part about Tesla, it has pricing power. It can reduce the price of its vehicles at any time and crush the competition. Then add in the federal tax credits from the Inflation Reduction Act, solar, autonomous driving the future, and potentially even humanoid robots with Optimus, and you've got a long-term winner in any long-term investing growth stock portfolio. Tesla is a green energy conglomerate and an AI company for the next decade. Digital advertising is huge, and I'm going to tell you why. The Trade Desk is an online platform for buying digital advertising, and digital ads get placed on internet-connected devices such as smartphones and televisions. This is known as programmatic advertising. The Trade Desk has incorporated a best-in-class AI engine into its platform, and the company has the most advanced data marketplace in the industry. The Trade Desk AI-powered tools allow advertisers to strategically target ads, as well as optimize campaigns for better outcomes. Streaming services are taking over. Cut the cord. More and more of us are watching our favorite programs on connected television streaming services. In fact, in July of 2022, streaming took the crown for the first time in American history in terms of watch time. This shift and this secular growth trend could really fuel the Trade Desk growth over the next several years. Quadrant Knowledge Solutions recently recognized the Trade Desk as the leading ad tech provider. This was based on greater customer impact as well as superior technology. They are best in class. Looking ahead to the future, digital advertising is expected to grow to a TAM of $1 trillion. That could mean a huge runway for growth for the Trade Desk for many years to come, and I think it's a great long-term investment. According to Cybersecurity Ventures, the cost of cybercrime is expected to hit $8 trillion in 2023 and grow to $10.5 trillion by 2025. Crowdstrike is laser focused on endpoint security. It protects the people, the processes, and the technologies that drive the modern enterprise. Crowdstrike is a single agent solution. It's designed to stop breaches, ransomware, and cyber attacks, powered by world-class security expertise. expertise and deep industry experience. Now, Crowdstrike harnesses artificial intelligence AI as well as machine learning, and these solutions are used to detect and prevent modern threats, all using the speed and scale of the cloud, built in the cloud for the cloud. All of this indicates strong long-term demand for Crowdstrike's cloud-based security offerings. Crowdstrike forecasts a total addressable market in 2025 of $98 billion. Now, this is based on Crowdstrike's current offerings, and they continue to grow those offerings all the time. So Crowdstrike could be at the start of a massive growth curve. They are best in class when you think of endpoint security, and there is competition. This one is best of breed, and I believe that Crowdstrike will reward long-term investors. There's no question that fintech is a massive secular growth trend. Square, which changed their name to Block, combines in-person as well as online payment systems and solutions. Block really is a suite of products. So online payment processing, a lot of people know it for that. But they really have mobile, retail, online, sales and business management tools, all streamlined together in one package. Now, Block forecasts its total addressable market to be $190 billion in gross profit. That number represents $120 billion from Square and $70 billion from Cash App. That number's up 20% in the last 2 years, and it should continue to climb as Square Block offers new products. And Cash App is becoming a commerce engine for consumers. So although Square simplifies things for businesses, when you think of businesses, they're getting much more into the consumer side with Cash App. And Cash App brings together the ability to send, spend, borrow, and invest, all in one single platform. And this strategy is resonating well with younger generations. And listen to this, Cash App ranked as #1 for the most downloaded digital wallet in 2022, with more downloads than PayPal and Venmo combined. And they're gonna take this to another level by allowing consumers to use digital wallets for shopping. Specifically, products from Afterpay and Cash App sellers will populate in the Discover tab on the Cash App, allowing users to browse and buy products on the platform. That could create a powerful network effect. As more consumers become Cash App users, more businesses are likely to accept Afterpay and Cash App. And that feeds off each other, right? Because as businesses offer it more consumers are gonna use it, and vice versa. And I really think that's why I'm so bullish on Block long term. It really has that network effect. It also continues to innovate and to add new products. They recently integrated Afterpay after buying them last year in 2022. They acquired Afterpay for $13.9 billion, which is a big price tag. But I think long term, there are a lot of benefits from this integration. If you're not familiar with Afterpay, it really deals with buy now, pay later. Additionally, I like Block because it's investing more into blockchain and cryptocurrency. And of course, that's why they changed their name from Square to Block. You can already use CashPay right now to buy and sell cryptocurrency. In fact, you can buy Bitcoin instantly with as little as $1. And you can even get paid in Bitcoin as a seller. And I believe these offerings will continue to expand. They're gonna offer more cryptocurrencies on their platform as well. These things combined make me very bullish on Block long term, and the company's really riding 3 major trends. Of course, fintech, but then also digital wallets and cryptocurrency. So I am long on Block, and you can check it out. The ticker is SQ. The rise of the machines. Perhaps someday NVIDIA will be blamed for this. NVIDIA really pioneered accelerated computing, and they did this to solve the most challenging computational problems. And their growth has been fueled off of demand for 3D graphics GPUs primarily. But now the game is starting to change. Now we're starting to talk about artificial intelligence, data science, autonomous vehicles, AR, VR, and so on. NVIDIA has a unique strategy. It's a platform strategy. It combines hardware and software. And this really creates a unique value for its customers. You're talking about hardware, software, algorithms, libraries, everything together in one platform. It's very hard to compete with NVIDIA, especially when you think about their AI as a service model. And their unique model, it really is bringing developers into that model. And as more developers use the platform, it brings more developers to the platform. So NVIDIA really has its own ecosystem, and it also has that network effect. They're a leader for AI semiconductors. And software is the next phase of that growth. So NVIDIA's enterprise AI software, it essentially serves as an operating platform for AI. And as I mentioned earlier, it's very hard for competition to replicate this. So AMD might be able to go and create the same hardware, but they don't have that same scale. They don't have that ecosystem or the software. This will ensure that NVIDIA holds a top spot for years to come. Now, just their artificial intelligence TAM, just the AI TAM for NVIDIA is $600 billion. Of that $600 billion, $300 billion is hardware and $300 billion is software, and it's just getting started. NVIDIA touches all the megatrends that we get excited about, whether it's data center and cloud, whether it's gaming, AR, VR, metaverse, even autonomous driving. I think there's a lot of room for growth, electric vehicles and autonomous driving. But now you think of artificial intelligence, AI chatbots, digital twins, Omniverse. It's hard not to be excited about NVIDIA as a long-term investor, and I've been long since $35. NVIDIA, the king of AI, ticker NVDA. If you don't own this stock yet, you're gonna hear the ticker and you might wanna just fast forward. I promise you, don't do that. This is a very unique business model and it has one of the few true moats that I can think of. In today's era, moats are very hard to come by, and I believe this company has a strong moat. The company is Axon Enterprise, and it's a personal protection and law enforcement technology company. They're best known for what's called a taser. You've probably heard of a taser, right? That's what they're known for. And although they do sell the taser guns and the hardware, that's not where the largest opportunity actually sits. Axon's biggest opportunities are really in areas like digital evidence management and real-time operations, body cams, and they have a software as a service model. I'll get to that in a second. And the core reason for this, law enforcement agencies, defense attorneys, and prosecutors, they're increasingly relying on these tools for their daily routines. So Axon has a wide variety of clients, from local law enforcement agencies, police stations, but also federal, international law, and even some private companies. And they're really all around the world, but there's a lot of room for growth, I think, internationally. The average length of their customer contract is over 5 years. And better yet, this is the icing on the cake. I like recurring revenue models. Axon has 70% or more of their business revenue coming from recurring revenue. The beauty of Axon's model is it combines hardware and software, and both have a recurring revenue element to them. And this is really driving the retention rates for their products and services. Their main growth driver right now is Axon Cloud. Now, this is a software suite, and the gross margins are over 75%. The business also has a compelling free cash flow model, and the total addressable market is $50 billion. By 2025, listen to this, we aspire to achieve revenue of at least $2 billion, reflecting 20% top line annual growth. They also want to reduce their stock-based compensation dilution, and that has been a red flag for some investors, but they are trying to address that. Axon has really deep relationships, and they don't really have much competition. There are some competitors out there, but they dominate the market. I believe they have a rare, rock-solid moat that's really hard to come by. It's also a growing trend. You're trying to protect and save lives, so instead of lethal force, they can use a taser, and it makes a lot of sense. I see more and more agencies adopting these solutions. And this stock has had a massive run over the past several years, but I can see it still being a winner for many years to come. Space exploration has a humongous TAM, and if you have a speculative risk appetite, this next stock is for you. This could easily be a 10, 20, or 30x stock. Of course, there's no guarantees, and this is a speculative investment.
1, 0, and liftoff.
The next stock pick is Rocket Lab.
With this project, it's about time I finally ate the hat.
Today, Rocket Lab focuses on smaller satellite launches into space, but they're getting more into those larger launches, including reusable rockets like SpaceX. Rocket Lab is also adding additional services and products, such as satellite manufacturing and components. They're trying to grow into more of a vertically integrated space company, and this could be a potential long-term winner as the space race heats up. This is the best pure play launch company that you can buy since SpaceX is private. orbit. And the valuation, although it's expensive, is reasonable in comparison to SpaceX. And this trades below a $2 billion market cap. Of course, SpaceX is the top dog, but there is a lot of total addressable market. I'll get to that in a second. And Rocket Lab already holds a top position in the industry. In fact, among US rockets, their Electron rocket is the second most launched behind SpaceX. Delivering small satellites into orbit, Electron has logged 33 launches and just another one recently. And they've deployed 155 satellites. Morgan Stanley predicts that the space economy will grow to $1 trillion by 2040. If you're investing in Rocket Lab, you should plan on holding it to 2030 to 2040. So this stock might not fit your time horizon. But I believe that Rocket Lab could easily be a 10x stock. It's trading under a $2 billion market cap, and it wouldn't take much to even be a 20x. Of course, there's no guarantee, but for investors who have that stomach for risk, this is a great long-term investment. Check out Rocket Lab, ticker RKLB. This next pick is also speculative. And you're going to hear the name of the ticker and think, what is Eric talking about? Please listen to this. Celsius Energy has really carved out a niche, especially with younger and active consumers. It's an energy drink company focused on the healthy lifestyle. When you think of the large popular energy drinks like Red Bull and Monster, these are generally associated with artificial ingredients, high levels of sugar, and probably heart attacks. But in all seriousness, heart palpitations. So Celsius has been growing like a weed, and it caught the attention of Pepsi. Pepsi bought an 8.5% stake in Celsius in August of 2022, and Pepsi paid $550 million. But the most important part of this relationship, this partnership, is that Pepsi is now the preferred distribution partner for the United States, which is huge. Now, if you remember back in 2014, there was a similar deal like this with Coke and Monster has been on an absolute tear since then. And I'm not saying that it absolutely has to happen with Celsius or that it's a guarantee, but I think there's a good chance that it happens. And I'm gonna explain why, so just hold on. So this partnership with Pepsi, not only does it open up new doors for Celsius within the US market, it also can be a huge opportunity when you think of international. And I think that's where a lot of the growth could come. Now listen to this stat. The global energy drink TAM, total addressable market, expected to be $108.4 billion by 2031. That's a compound annual growth rate of 8.2% from 2022 to 2031. Celsius has a current market share of less than 0.5%. And as I mentioned, they're growing and expanding rapidly. In fact, they used to not have Celsius at my local Costco. They do now have it. I've also seen Celsius at several gas stations that I didn't see it at just a few months ago. So this isn't really a technology growth trend, but it definitely is a secular growth trend. And when you look at the US expansion opportunities with Pepsi as well as international, and you look at the long-term growth prospect here in that TAM, and the fact that they only have a 0.5% market share, Celsius is set up nicely to be a long-term performer, be a long-term winner in your growth stock portfolio. Of course, this is more speculative than a lot of the other picks on this list, and it doesn't really have a true moat. But even if they got their market share to 2%, that's still going to be a massive winner. And that's really what I look at. The TAM is so large that there can be lots of competition. There's lots of fish to fry and lots of money to be made. So I believe that Celsius, even from these levels, can be a bagger long term. Big data, analytics, and AI. This next company has it all. Snowflake enables data storage, processing, and analytics solutions that are faster and simpler to use than most products out there. Snowflake is data warehousing as a service. You can store all of your data, and you can analyze all that data and all your records in one place. You can take siloed information, disparate information from across your business and put it together in one place where it's simpler and it's easier to use, digest that information. Data is powerful. Snowflake allows you to make decisions faster in real time because it's eliminating those fragmented silos, having that data stored in all kinds of different disparate systems. The other huge advantage of Snowflake, it can be easily accessed by third-party applications. And this is very powerful, especially when you think of data visualization. Snowflake also partners and works across the public cloud platforms, Microsoft Azure, Google Cloud Platform, and Amazon Web Services. It also integrates integrates very easily with other software tools, making it very powerful for businesses. Now, Snowflake is consumption-based, not software as a service, but it is more of a mission-critical business when you think of enterprise software. And as the economy improves, I think you're going to see that growth accelerate again. Snowflake's also working in areas like advertising, and I think they could become a digital ad titan someday. The other thing that's really powerful about Snowflake, now this is really important. The data cloud that Snowflake has essentially allows them to be kind of like a utility for AI applications. So companies can pay for access, for data, to build and train their AI applications. Management estimates that total addressable market is $248 billion by 2026. That leaves a massive amount of room for growth for Snowflake. Now, this is not a cheap stock, and it's probably a spec investment for most people watching this video, especially if you don't understand the company. But the opportunity is massive, especially with a 5-star management team led by Frank Slootman. Intuitive Surgical is known for its Da Vinci surgical system, a leading robotic-assisted surgery device which allows physicians to perform minimally invasive surgery. The Da Vinci system can be used in various surgery types, and the advantage is that unlike open surgery, which requires an incision large enough for surgeons to access the organs involved, the Da Vinci system can get the job done with a few small incisions and tiny, versatile tools that highly trained physicians can manipulate with accuracy. Intuitive Surgical is the runaway leader in its field with over 75% market share. Intuitive Surgical has over 7,500 of its Da Vinci surgical systems installed globally. The company also sells a surgical robotic system called the ION, which is specifically for lung biopsies. Now, I love recurring revenue models, as you know, and most of the stocks that I own in my portfolio fall in this category. Intuitive Surgical sells its Da Vinci systems for around $2 million a piece, but the beauty of the company is its recurring model. The company generates even more revenue from the instruments and accessories that go with these systems, plus recurring revenue for the replacement and installment costs these parts incur. In fact, nearly 80% of the company's revenue come from its recurring model. Intuitive Surgical dominates, controlling approximately 80% of the global market. According to market research firm Markets and Markets, the global surgical robotics market value hit $8.5 billion in 2022. However, this space is on track to witness monumental growth and more than double that valuation to $18 billion by 2027. The benefits of surgical robotics systems, which can include everything from better recovery outcomes for patients to better precision during surgery and broader usage by medical providers, are just a few catalysts expected to drive the industry's growth story. This is an excellent growth story in the healthcare sector, and Intuitive Surgical's stock could reward its shareholders handsomely over the next decade. So let's look at e-commerce and fintech both in one company. Now, if you're in the United States, you know what Amazon does. And you might not know what Mercado Libre does, but they're basically the Amazon of Latin America. Now, of course, they can't really be Amazon because they don't have Amazon Web Services. In fact, Mercado Libre's entire business is powered by AWS. But Mercado Libre's growth engine is really going to be their fintech solutions with Pago. So e-commerce has been growing rapidly over the last decade, and that's going to continue to grow. Now, once I explain this data to you, you're probably going to be more bullish on MELI than before you watch this video. And if you don't know what MELI is, you're probably going to go look it up after you watch this. So e-commerce and fintech, they're definitely secular growth trends. They're mega trends. Mercado Libre captures both, and listen to some of this data. So as the internet becomes more accessible, especially when you think of rural areas, that's going to open up the door, not only for e-commerce, but also fintech. So think of broadband satellite internet companies like Elon Musk Starlink or Amazon Kuiper. More people get access to the internet, more people use these services. 70% 70% of Latin America's population currently remains unbanked or underbanked, and 58% of point of sale purchases are paid in cash in Latin America. The room for growth when you think of fintech is absolutely enormous. To support my thesis even more, listen to this stat from the World Bank. 32% of the population of Latin America and the Caribbean, or 244 million people, there's 46 million people that live in rural areas. And these people do not have access to the internet. Think about even 20 million of that 46 million getting access to the internet. Not only that, a large population that already has the internet still is not using fintech. This is the best way that I can explain Mercado Libre to you. If you took Amazon, PayPal, Shopify, eBay, and Square and merge them into one company focused on an unserved market, you would have Mercado Libre. They have a flywheel approach, and you know that we love flywheels on Fired Up Wealth. Check out all the different services they offer on your screen. Mercado Libre has a $1 trillion total addressable market. $1 trillion. Currently, their fintech business has 41 million active users, and that's growing fast. Latin America has one of the fastest growing internet population rates worldwide. So you think of the US, almost everybody has access to the internet. But if you're not from Latin America or if you've never visited there, you don't realize that it's not like that there like it is here. So customers in that region are really adopting these technologies, e-commerce and fintech, at an explosive rate. And with 41.6 million accounts, Pago has really just barely scratched the surface at this point. There's 650 million people in Latin America, and they've only got 41 million signed up. Now this stock has risks, of course, all stocks do. But if I'm looking for a growth stock where there's a lot of opportunity for growth, that total addressable market, lots of room to grow into that. And especially if you're looking for diversification and get an international opportunity, Mercado Libre is a great play, helps diversify this 12 stock portfolio. MELI. This next stock is a monster, and it's the only dividend stock on this list of 12. But stay tuned for the bonus picks. I'm gonna provide 13 additional stocks for 25 total stock picks, including 5 spec stocks and 5 dividend growth stocks. And I don't need to tell you a whole lot about Microsoft, you know the company, but it's really a technology conglomerate that covers so many secular growth trends. Megatrends like cloud services with Azure, video gaming, enterprise software, cybersecurity, and more. Think of like getting a Palo Alto Networks, an Electronic Arts, and an Amazon all in one company, but better, and with a dividend. The company has very strong financials and a very deep portfolio. And of course, AI chatbots have been all the buzz. And when you think of ChatGPT, this is gonna be a big story for Microsoft when you think of Edge and Bing. And sure, part of Microsoft's business is cyclical when you think of the PC market, but Microsoft provides so much diversity into these technology megatrends. And it's a higher quality company than most of its peers. I've owned this stock since 2012 long, and I think this company could do well for many years. Okay, so I want to provide some bonus picks. And the reason I'm doing this, every investor has his or her own risk tolerance. You have to build a portfolio that suits your personal needs, your goals, your DNA. And so some of you watching, you want to be more aggressive than the 12 stocks I picked. And so I'm going to provide some spec stocks that have more risk reward. And some of you watching want to be a little bit safer and think these stocks are too expensive and too risky. So I'm going to provide some dividend growth stocks that are higher quality, lower risk, lower reward. So first is going to be the new oil semiconductors, AMD. Of course, Nvidia was on the list of 12, but if I had to pick one stock between AMD and Nvidia, it would be Nvidia, but I do own both and I'm long both. Spec stocks. I really like INDI Semiconductor. They're a pure play automotive semiconductor company. And if you're interested in learning more about INDI, I've been covering this company for a long time on this channel. Make sure you subscribe, click that bell for notifications. In fact, we interviewed the CEO of INDI Semiconductor right on this channel. So fintech, I want to include SoFi. I could have easily used SoFi instead of Square. For green energy, Enphase and STEM. They're risky stocks, but they could provide tremendous upside. And then Cloudflare. I really like this company as well. It's another expensive stock in that cloud universe. It's a SaaS company. If you're a dividend growth investor, these are DGIF stocks. So they're focused on total growth of the dividend as well as growth of the share price. Nike, Wingstop, Tractor Supply Company, John Deere, and United Healthcare. And I also have a couple healthcare picks that you can look into. Vertex and Moderna. Both of these stocks could be huge plays in the biotech space, and feel free to explore those companies on your own. I appreciate your time and attention. Please subscribe, click that bell for notifications, drop a like, drop a comment, and have a great rest of your day. Take care.